Hey traders, Raghee here. Welcome to another episode of Charts and Coffee. We got to talk about this CPI to kick things off. Great to see everybody. Good to see you all. Got a lot of the regulars here in the room. Love it. Good to see you guys. Okay, so first stop is the economic calendar and what we had this morning by way of the 8:30 a.m. Eastern CPI. And you'll take a peek here, Wednesday, May 12th, and we've got a lot going on. CPI numbers. Do you think it's an accident that right after CPI numbers that the Federal Reserve had to have known we're going to be screaming hot as the Federal Reserve says, inflation's in check? Coincidence? We got cleared at 9 a.m. Not a coincidence at all. That's happening right now. As you can tell, there's an online event hosted by the National Association of Business Economists. Fine print, post-CPI cleanup. And so that's what we've got kicking off the morning. So that's going to set the tone for the open, not just the CPI, but whatever and however it is that Clarity is going to somehow clarify those numbers. We've got Bostic at 1 p.m. So heads up, plenty of FOMC chatter this morning. And, speaking of this morning, what did we get? If you take a look at, I'm going to jump on over to a 5-minute chart, and there you go. Boom. All right, there's your Dow, and there's the fade. Now, let's talk about this CPI number for a moment. Clarida's comments. Clarida says inflation's rising above 2%. And you know what they're going to use? What is the dog ate my homework for the FOMC? Transitory factors. So every time the FOMC wants to sort of dismiss any kind of inflation insinuation at all beyond what they think is normal, they're going to say, well, it's transitory. All right. So if someone looked up a $9 word in the dictionary, that's going to be their mantra. So don't be surprised to hear him say that. Don't make it a drinking game. You will end up in the hospital. All right. So then what else do we have? What about this number is so shocking? Basically, what we have is, again, the bond market versus the Federal Reserve. And this is what I mentioned yesterday, and I will continue to reiterate it. The bond markets can be right, but the Federal Reserve can control the market. Bond market is going to be looking correct in hindsight, in history. We don't trade history. We invest and trade in the now. And so we have to remember that, yes, bonds might be proven to be correct about the Federal Reserve underestimating what inflation factors are going to be. But we went from about a 90% expectation for rate hikes, and I believe it was late 2022 to 100%. That's what that was. Look, this is the market remembering, oh yeah, the Federal Reserve still at the head of monetary policy, money printing, and asset purchases are still beyond bonkers. If you want a really great breakdown, yesterday in the Wall Street Journal, there was an op-ed written by the GOAT, greatest of all time, Stan Druckenmiller. And he wrote a really cool op-ed, co-authored, about the insanity of what the Federal Reserve is doing right now versus the current economic picture. Remember, though, and this is a gentleman who can separate his analysis and opinion from his actual trades in probably the most remarkable of ways. And he will admit he makes more money from falling markets. So do I. That just happens to gravity applies. So, but check out that op-ed. I believe it's not in front of the paywall. I Google WSJ op-ed playing with fire, and you should see that op-ed from yesterday. Very, very good write-up. All right, so that's what we've got going on this morning. It looks like the market's taking most of that move to the downside back. But, look, I've gone through the Dow futures, S&P futures, and now the NAS. Dow futures took that move back, and now we're way above it. Why? Because the Dow is the relative outperformer in this environment. Dow is going to benefit from this tick up in inflation because the Dow is going to benefit, you guys know what I'm going to say, most disproportionately, positively from the macroeconomic reflationary environment we're in. S&P is going to be in close close second. And the Nas, well, tech stocks are going to continue to hate any kind of suggestion that interest rates will rally ever, right? The tech stocks just see the sun go white dwarf, right? Which is supposedly going to happen in 1 trillion years, as opposed to rates going higher. And they might be on the same timeline. Okay. All right. Anyway, that's where we are this morning. Again, the market that I have been putting most of my emphasis on, the Dow, that's resumed its move higher. That's going to bode well for our book of trades. And that's where we want to focus on the overall movement. All right. Oh, the cat's making his, where is he? There he is. He's making his appearance on Charts and Coffee. All right. So first question, let's kick this off here. Line Watcher asks, what is the significance of the bar following a sell-off inside day, minor low, etc.? It's a pause. That's really what it is. We're looking for pauses. Certain candle formations are going to be representative of sentiment and momentum, and that's really all that is. It's a pause candle. My preference really for a market that has acted in an extreme way, extreme being crossing certain thresholds or beyond typical historical daily or hourly price movement ranges, DPMRs and HPMRs. So what that is just letting the market to simmer down for a minute and then making sure that whatever I liked pre-dramatic move is still valid post. All right, thanks for the question. Next up, hey there, Paul. How you doing, winner? I'm looking at AZEK and TREX, pulling back into the wave. All right, let's take a look. So go to the daily time frame. That would be most helpful. All right. So first of all, AZEK, or however that's pronounced, what is the universe of stocks? What is the pool, if you will? What pond is this thing swimming in? What are the other groups? Is it a relative outperformer? And I would have to wait till after earnings, because this is now that right on top of earnings window that I typically want to avoid. But Paul, look at this. If you want to step out, what do I recommend? 6, 4, 2 weeks before earnings. Look at that nice double green environment before earnings. That's typically what we want to take advantage of. Let's take a post look at that one. Second one is TREX. Now this is post, right? That's great. This is fine, right? This is what I like. I like to see earnings give us that pullback. I keep an eye on this one. So let's look at a ZEC, or whatever that is. I have no knowledge of either one of these two. But again, how would I familiarize myself quickly? I get an understanding of historical volatility, and I would go dive into ETF DB and look at where, if any, there's any passive investing exposure. Look at the other names it's trading with. Make sure it's a relative outperformer, and preferably a relative outperforming sector or industry. So good stuff. Definitely like the second of your two symbols there. Definitely like that one a lot. Okay, next up is McDonald's. So I was in, and I will be again today, I was in the options room yesterday, and I broke down the McDonald's trade. You know what? Let me share this with you guys. That's fine. This is what I was looking at for McDonald's. It's at the bottom of the screen, and it's a setup that looks at a relative outperformer, and it's a setup that takes advantage of the wave. It's a setup that's using volume ledges and Darvis levels and points of control. It's not just a price. Look, if your indicators are price only, my wave is price only, propulsion is price only, grab keys off the waves, that's price only. What a lot of traders end up thinking they're getting a diversification of indicators when they're slicing and dicing open, high, low, close and new and unique ways. That's really a redundant type process. If you have nothing but price-based indicators, then you're just looking at price in different ways. Add a time-based time-based view of the market. Add a volatility-based indicator. Add a volume-based indicator, and then you'll have all four factors of the market working for you, and you're not just looking at open, high, low, close, ignoring volatility, volume, and time. And that's where a lot of traders run into trouble. You've got a great post earnings, volume, and price-based zone in McDonald's. So I like that one a lot. And that's something we did. This is a trade we broke down in the options room. And we've been talking about McDonald's being on our radar in the sector secrets room for a minute. It's definitely a stock that we like. And so, yeah, I like McDonald's. I do like McDonald's. I think it's both a relative outperformer in the discretionary, and it's a Dow name as well. You got it. And I'm with you on that. We just broke that down as a setup yesterday. Okay. Next up is Jonathan asks, are stops and targets binary? No, I want to believe they should be, but based on volume and based on time is probably the biggest factor that takes that binary on-off switch type adherence to stops away from me. Look, I'm a discretionary trader. I'm not a systems trader. I want to be systematic. I want to have a methodology, but I don't want to be ignorant of major psychological levels, time, day. Those are things that will make it less binary. But do I have a plan? Of course. So no, I'm not, blind adherence to this is the stop and that's it. I'm not. Or if you're up but not at the first target, would you take profit before getting stopped out? So here's what's challenging, Jonathan. I will tell you, as a trader, we have the freedom to do whatever we'd like, right? For me, as both managing my own book of trades, but then also leading people through my book of trades, I've got to be more, I won't say completely binary, but I've got to be more rules based. So if I'm going to find an optional target, I've got to alert folks of it. And why would an optional target appear? It could be that there's an event on the calendar that wasn't on the calendar when I first put the trade on, sometimes days, if not weeks in advance. Powell suddenly has a speech. Yeah, I might have to make adjustments to targets and exits. Let's say suddenly I see a volume ledge appear because now we're seeing a point of control move or something volume based, which is always a dynamic thing. Then I might have to make some decisions based on, new information, new catalysts for volatility. So I hope that helps answer the question, Jonathan. Thank you for it. All right. Yeah, that core number, kind of hot. Yeah, it was lava, and the market responded in kind. Yeah, for sure. Okay. Next up is, Paul. So those are, deck material and home. Oh, well, then I love it, because one of the things that we went shopping for, as you well know, in Sector Secrets, were the ITB, XHB, housing, construction. Yeah, absolutely. I love those industries, that part of the market right now, screaming hot. No exposure to tech, which is great. Decks, not tech. I like it, Paul. Next up is, what is a time-based indicator? Sure, what would a time-based indicator be? So time-based indicators really would come from two things. One, look, dividend days, earnings, that's time-based. The psychology going into, look, I don't call this the countdown trader because it sounds cool. It probably doesn't. But why? We're always counting down to events, right? I'm always counting down to an event that could be a catalyst. So in terms of time, if you're a day trader, if you're an intraday trader, you know that clearing range, time-based. End of the clearing range, time-based. Those volatility periods like 10:05, 10:25 to 10:35, the European close, the midday doldrums, those are all time-based intraday factors. The bonds close, the end of the day session, end of day hour to the session, closing, that last hour of the day psychology, again, time-based. What else is time-based? The economic calendar. Our economic calendar is time-based. So those aren't indicators per se, but I look at them as indicators. I view them as important as any moving average on my chart. So I'll sort of file them under indicators. What else is time-based? Well, we did a little deep dive into seasonals yesterday while I was in the, was it in the options room? It might have been in the options room then too. So my point is, you're going to find that there are a lot of different time-based tendencies, pit bull lows or tendencies, sell in May and go away, time-based tendency, more of a seasonal, but seasonal is definitely time. So there's a lot of indicators that are going to rely on the clock or the calendar for insight into human reaction to the market. Because remember, every one of these candles really are lots of people, their emotions, their sentiment, momentum, is then represented by price. But it is really more of a sociology game we play, not finance. And I think time is very much part of that psychology. So thank you for the question. What is my system for setting stops? So John, it all starts with a term that I use to make sure I stuck with my stops, that I respected them. I don't like to consider stop losses just stop losses. It's a stop order. But the terminology that I use to sort of play a mental trick on me and keep me more adherent to respecting my stop, actually getting out of the market when it's met, is something called point of validity. A point of validity could be the culmination of many positions representing a risk of ruin. That's one way to manage a book. A point of validity could be time of day. Point of validity could be the validity of the trend. So I use this concept and I coined it to play a mental trick with myself. Point of validity. Am I arguing with a stop loss? A stop loss is pretty meaningless. If I was willing to take a 1% risk, why not 1.5? If I was willing to take a $500 stop, why not $550? It's too negotiable. Point of validity for me becomes, why is the trade valid? You've got to know that before you enter, right? Why is the trade valid, and when does that validity, price level wise or time level wise or volume or volatility, when is that broken? So for me, that validity meaning kept me more disciplined, because now I'm thinking to myself, hey, you dope, you're really ignoring the validity of the trade versus the stop loss. And so that's what worked for me. And that's a little game that I played with myself a few decades ago to help me stick with stops, because that's something. So that's the root of it all. What's my system? It's not a system as much as it is a psychological game. Because look, unless we're systematizing our approach where the computer's getting me in and out and I'm taken out of the equation, most of adhering to a stop is psychological. It's not order entry. It's not even process driven. It's psychological. But if you start with point of validity and you start to determine, well, where's my trend no longer valid? There is an indicator or a price or a time linked to that. Recognize that, respect that, and your stops are far more systematic, and I feel easier to follow. All right, so I hope that makes sense. Question about Baidu. Well, let's see what we got here. What would be a good time to sell my Baidu? I'll tell you what, Carol, I'll be quite frank. I couldn't tell you, because unless you're looking for a timing element, I don't like to be in the market through earnings, but I don't know what your trade is. So in fairness, I couldn't even begin to answer that question for you. But give me a little bit more information. We're almost out of time here, but if you have a question about a setup, I've got to know, where you're in, why you're in, what trend you're trying to take advantage of, your entry price, things like that. So I couldn't even begin to guess. However, kind of interesting where we are, just aside from the question, Carol, kind of interesting where we are in the stock that you asked about, where we've got this 174 level going into earnings. If there's going to be a bounce within the context of a pretty established downtrend at this point since mid-April, if we're going to see a bounce, that would be a great technical and maybe timing reason for it. Okay. All right, gang. That is it today for Charts and Coffee. Thanks as always for joining me. I'm going to go head on over into the Sector Secrets room. We've got our weekly Q&A and market open session, which we do every Wednesday. Hopefully you guys can come join us over at Sector Secrets. You can check more out about what I'm doing with our think tank of traders at simplertrading.com/sector. I'll see you all in that room here in just a few moments. And then I'll be doing the close in the futures and options room today. So I'll see you all at 3 p.m. in those chat rooms. All right, gang, be good to each other.